Okay, I believe you can all see me clearly now. All right, so I welcome you all once again to tonight's session. Today we'll be looking into we'll be taking live trades, all right, and running some analysis, all right. I'll be sharing with you some of my interesting strategies and approach I take in picking trades, okay, in picking trades. Now, we'll be reviewing Euro USD. All right, let me take off all those previous lines so we can start the analysis afresh and better understand where we are going. All right, so here we are on the monthly time frame, and we would be looking into certain things that I've always shared with you. Like I said, when you open a trade for the first time, you are asking yourself, what is the market structure? What is the market structure? It's an important question. Understanding the market structure, all right, would give you a clear direction to the next thing, in which I would apply in my trades now. Now, the question we are asking ourselves is, what is the market structure? Obviously, when we take our trend line and run it down through this way, like I said, to get a clearer level to place the lines, let's change it to a line chart. All right, with the line chart, we can see the levels to place this on clearly. Okay, we see the levels to place it on clearly. All right, now, okay, good. Now, so we can see that the market is in a downtrend. Okay, the market generally is in a downtrend, and this is the market structure. Okay, now to now have more clearer insights onto what the level of support level and the level of demand level is, we will then have to identify our demand zones and supply zones. Demand zones meaning the supply, resistance level. All right, sorry, demand zones mean that what, the support level, and supply zones mean that what, the resistance level. Okay, now, good. So we are in a downtrend. Now let's identify support and resistance level. Okay, if you look at this level here, you will discover that at this level this level is a support level. All right, a demand zone pushing price up each time price touches that level. All right, now, but when you look at this place where price finally broke through this level, let me put an arrow to identify it. Let me put an object there so that we could identify that level clearly. All right, good. Now, so look at this level. That's the level where the breakout occurred. Okay, the breakout occurred on this level and price fell. All right, which means this support level became weak as price keeps touching it consistently. All right, the more price puts a footprint on a particular level, the weaker the level gets. All right, so we can see price coming to this level. Let me move this. Price came to this level, moved up, came down to the same level, that same level again, which means this level has become weaker than the previous one. then price went up, came down to the same level again. This level has become weaker than this, and this has become weaker than this. All right, now price finally went up, and what happens? Came down to that level. Now because this price footprint has been tested several times, makes it weaker and weaker after every test. Okay, and finally there was a breakout below this support level, and price went down and struggled here now and came up again to the same level. Now you will see that this support level here, this level that was support level here, is now a resistance level here, and has been resistance here, then another resistance level here. Okay, now which means that price resisted at this level and came down, went up again, resisted at this level and came down. All right, now we've identified this place, this level as support level, and we've identified this level as resistance level. Okay, now if you look at the area where the current price is, you will discover that price is at this level. All right, good. Price is at this level. Okay, and as you can see that there is so much story being told here, right, in relation to the candlestick that we can see on the chart. All right, so the candlestick we can see on the chart is telling us so much story about this trade. All right, now something interesting is about to happen, and let me unveil a certain secret to you. So you can see that from this place, let me map out this place. Yeah, I'm coming. Let me map out this place. Okay, you can see that from this place to this place, right, the price have been ranging within this box. All right, so which means sorry, I wanted to pick something here. Okay, so which means price went down here, came up, came down, went up, came down here. But you will see that the force and the pressure at which price came down here is not the same at which price has come down here. All right, now with a focus on this region, now you will see that last month was a serious bearish candle. All right, that closed below these previous lows. I don't know if you get the point now. Now if you discover, look at this, you discover that this, okay, let me use this. Okay, now you discover that these candles closed here, these candles, all right, their close is above this line. But if you look at the close of the last month's candle, it closed below this previous close. All right, is a powerful indication that this market is a bear market. All right, now if I am a swing trader or a position trader, in which I am and I prefer, all right, I will take this trade. Okay, I will short the market. So now I have a bearish position considering the monthly time frame, but because I would need more clarity to support my analysis on the monthly time frame, I would go to the weekly time frame. Fantastic. So on the weekly time frame, you can see more stories being told by looking at the candlestick. All right, more story being told by looking at the candlestick, making it obvious that the market is currently bearish. All right, and also if you follow chart patterns, all right, you would identify that the current chart pattern on the weekly time frame and monthly time frame is a descending triangle. If you look at it from here, let me see if I can draw that out. Right, okay, good. Can you see that? Can you see what I'm trying to draw out here? Okay, a descending triangle. Now this triangle, okay, is indicating that momentum is going bearish. All right, momentum is going bearish. All right, so with the chart pattern of a descending triangle and with the consolidation box here in which we have framed up here, we could see that price has break out of the consolidated box that we have drawn here. All right, and we could see that the bear candle of last week was stronger. When we looked at the monthly time frame, we saw that last month closed in a bearish candle, fully bearish bodied candle, all right, that closed below the previous past 5 to 10 months. All right, now this is an indication that there is a sell opportunity and to make money from this. All right, now we are going to take that sell opportunity. All right, but like I used to tell you, don't take a trade without determining the stop loss and resistance level. Don't take a trade without determining the stop loss and resistance level. Okay, now let's determine our entry point and our exit point. So you look at this this green line here. All right, this green line would be my exit point. Okay, I'm taking a swing trade now. This trade might last for 1 week, and okay, and I will be taking my profit on this level. Can you see that? Because this level is the next resist support level. Okay, this level is the next support level. So what do I do now? I want to short the market. All right, so I'm shorting this market with my stop loss at 1 point. Wait, I'm coming. I want us to. Okay, good. I'm with my stop loss at 1.0816 and my take profit at 1.01044. all right, then let's modify. So as you can see here, if the trade goes against me, I will be losing $30 on this trade. If the trade goes in my favor, I will be making $40 on this trade. You might as well want to reduce your risk, all right? Because we don't want to make it 40 to 50, like more like a 50-50 chances for losses. Then let's go to the daily time frame to be able to map a resistance level closer at the point. Okay, let's bring it down now. Okay, good. It's a good one. A good one. Now, so this is closer. All right. Now, hopefully, price continues to fall. If price goes against me, I'll be losing 20. Last should be what is this again? Let me know. Okay, 20.87. All right. If it goes in my favor, which if it hits my take profit level, that will be 40. Right. So that is a 2-to-1 risk to reward ratio. All right. Risk to reward ratio 2:1. Now risk 1% to reward 2%. All right. So the figure I just mentioned is the stop loss and take profit, and they are at this place, right? This is the figure. All right. So you can see it here. Stop loss. Look at it. Look at this. Stop loss. This is the number. Take profit. That's TP. Take profit. SL. Stop loss. This is the number. All right. And we are taking a swing trade. All right. Based on our analysis on this market. All right. So let's take up on another trade. Australian USD. Australian USD. On Australian USD, before analyzing this market, what did I say we should do when we open our chart to take a trade? Let me know in the comment section. What did I say we should do when we open a chart to take a trade? What is the first thing you do? What's the first question you ask yourself? Let me know in the comment section. I'm waiting for you. That would help me know that you are following. Let me know in the comment section. Use the comment section to tell me which what you are to do when you open the trade, when you want to open a trade. All right, I'm looking for your comments. Keep it coming. All right, what do you do when you open a trade? So because of our time, I said when you open a trade, you want to ask yourself, what is the market structure? All right, what is the market structure? These are important points for you to ask now, and also carry out your analysis on a top-down approach from the monthly time frame, which is the higher time frame, to the lower time frame. Now, as you can see from this chart here, all right, you can see that price has been consolidating for months. However, the market is in a downtrend. All right, from here the market is in a downtrend. All right, so to have a quick one, when you open this market, you can also spot a descending triangle on the monthly time frame. All right, a descending triangle on the monthly time frame. Look at this. Okay, look at this. All right, so there's a descending triangle here, and when you look closely, you can see this bearish engulfing candle. All right, this bearish engulfing candle engulfed the previous green candle. All right, and closed below or the same level with the previous in the last 2 to 3 months. So this is this, look at this last month candle. It closed below this previous candle. So let's say this month we are in the month of May. All right, So we're in the month of May. So this was April. April was very bearish. All right. This was March. Okay. So it was February. So you can see that April closed below February, or at the same level with February. All right. April closed below March and February. So you can see even on at the same level. All right. Now this tells us that there is a bearish momentum coming in. All right, a bearish momentum coming in. Since for the last month candle to close below the previous two months candle, that's a bearish momentum there. All right. Now, in the monthly time frame, we have a bearish position. Now let's take it closer to the weekly time frame. Now, this is the weekly time frame. All right. This is the weekly time frame. Good. And you can see that we also have the same descending triangle. If you look closely here, you see that market has been consolidating. Let me put okay, this is it. Good. So market have been consolidating here. All right, market have been consolidating here. But when you look closely, you would see that the bearish momentum is quite imminent. All right. So price is gonna have the high probability of coming to drop and touch this level, this previous support level. All right. Now let's check it out on the. Let's check the daily time frame. Good. So as well, you can see what is happening on the daily time frame. Okay. So there was a bullish candle here and followed by a bearish momentum. All right. From the view of things, market can keep falling. All right. How do you know that? Let's look at it from the weekly time frame. So you can see on the weekly time frame that there is already a pin bar in view. All right. This is a pin bar. All right. Let me for those who might be asking, oh, where is the pin bar? Let me point it to you. All right. Okay. This is let me get the pin bar. Okay. This is the pin bar. All right. Where this red line is touching, this candle is already forming a pin bar. All right. This wick, we call it wick. This line, like that looks like the neck of this head, this candle here. It only shows that there is a sell pressure, because it is only when the market is pressured downward that you'll be having a wick like this. The same applies when the market is pressured upward. So you look at this here, look at it here, there's a wick here, all right, and indicating that market was pressured downward. And what happens here, you can see how the bearish candle followed. All right. Now same thing applies here. Okay, we are seeing a bearish momentum in view. Now let's look at the 4 hours time frame. Now, oops, interesting. So you can look at it, look at what is happening on the 4 hours time frame. Look at a clear story what is happening here. All right, market is on a bearish momentum. Okay, this candle came and closed below the previous 5 to 6 hours. All right, this is a clear bearish momentum that would touch down. I'm trying to determine where it should touch. Okay, so it might finally break out, all right, and come down, okay, to somewhere here, all right, and then we can look to put in our stop loss here. Let's zoom in. Okay, now we can look to put in our stop loss here. Okay. Yeah, the next resistance level. Let's use the daily time frame. Okay, good. I think we have something clear now. Good. Alright, so our take profit level can come here. Good. Our take profit level, good. Let me, oops. Okay, so our take profit level can come here. Yeah. Good. Alright, okay, the resistance level here. Good. Alright, our take profit can come here. And we can have a stop loss at this level. Let me see. Okay, good at this level. All right, I believe you get that. Now let's short the market. Why are we shorting the market? We've identified a bearish market structure. We've identified the descending triangle chart pattern. All right, from the weekly time frame, we can see that the bear in the last 2 weeks have been consistent bear movement. All right, and the pressure is still indicated in the current week, because we can see that pressure is coming in on price. So in determining this, we short the market. Our stop loss will be here and our take profit will be here. All right, so we are selling. All right, so our stop loss, look at where I'm taking the figures from. We've put it in the resistance level closest to it. Like I said, don't take a trade without determining your entry and your exit level. So stop loss 0.73080, and take profit 6861. Okay, 68617. We modify. Good. Okay, here is our take profit. So if this trade goes against me, we lose. It goes against us because we are taking the trade together. We lose 21 USD. If this trade goes in our favor, we would keep 90.8 USD. All right, so we leave the market to flow. All right, now use the comment section to tell me the top 2 things I told you to focus on before taking a trade. Top 2 things I told you to focus on before taking a trade. All right, top 2 things to focus on before taking a trade. Let me know in the comment section. What was the top 2 things I shared that you must do before taking a trade? Let me know in the comment section. I'm waiting to see your comments. I'm waiting to see your comments. All right, I'm waiting to see your comment, guys. what are the top 2 things I told you to focus on before taking a trade. Okay, someone said stop loss and take profit. Okay, yeah, someone said entry level and stop loss. Okay, someone said determine the stop loss and resistance level. All right, someone said, yeah, market structure. Market structure. Good. Market structure, support and resistance. Excellent. You are following. Someone said market structure, support and resistance level. You are following. That's great. You are following. Awesome. Okay, awesome. Yeah, trade structure. Yeah, you should be able to know your entry and exit level. All right, I open the floor for questions. If you have questions, drop it in the comment section and we'll kick off from there. All right, I'll read what Patrick said. Patrick said, once you open a trade, ask yourself the market structure and check the monthly time frame, weekly time frame, daily time frame. That's excellent. David Chin also said, identifying the market structure, trend, take profit and stop loss. That's perfect. That's excellent. Right? Shows you are following. All right. Damilola said, use a top-down approach for your analysis. Superb. Exactly. You are following. I'm super glad to hear about that. All right. So if you have any question, all right, you have a few minutes to ask while I answer your question, or we call it today. All right. So you would get the video would remain on our YouTube page for your consumption and for you to come back to watch it over again and learn from it over again. All right. Okay, great. So if you are learning from this session, if you've learned 1 or 2 things and you love what we are doing, take a snapshot of the YouTube page and the comment section, post it on Instagram, tag OctaFX, and also put the hashtag learning with OctaFX, hashtag OctaFX. All right. If you want us to keep doing this, you want us to keep giving out value, you want us to keep impacting you with knowledge needed to make profit from the market, support us. Put us on your Instagram page. Let the world know you are getting value from OctaFX. All right. Great. Yeah. So you say you have a question. Just drop your question in the comment section. All right, so you want to learn how to trade the news. Okay, so personally I don't trade the news. All right, and that's because for my own personal discipline, I don't want to jump in on the excessively volatile market. All right. However, there are ways to trade the news to prevent yourself from being burnt. All right. One of the ways to trade the news is to wait for the news to be announced. All right. So trading before the news can be gambling. All right. And trading is not gambling. Trading is business, and you want to trade it. You want to take it as such. All right. So if you want to trade the news, you might want to wait for the news to be announced so that you can identify the position of which currencies you should short and which currencies you should buy. All right. Because when listening to the news is not certain because you don't have the information before the announcement. So if you discover that the market is always having high volatility at that period of time, okay, and that can be how do I put it now? That can be detrimental if you are not careful. All right, you can blow up your account. But I would advise, if you are interested in trading the news, you want to trade after the news have been released, possibly 15 minutes after the news have been released, when the market has done its own volatility, and then it's now finding a balance. All right, so you might want to follow the trend back up or follow the trend downward. All right, maybe some other time we'll look into trading the news. All right, someone is asking, what is the best time frame? There is no best time frame. There is no best time frame. All right, it only depends on your approach. Okay, now top down approach helps you to come from weekly, monthly, daily, and all right, and it depends on what type of trader you are. If you are a scalper, then monthly time frame is not best for you. What is best for you is 1 hour, 15 minutes, 30 minutes, 1 minute, 5 minute time frames. All right, if you're an intraday trader, then 5 minutes is not best for you. Probably 4 hours daily, 1 hour chart. All right, if you are a swing trader, a position trader, then you look at monthly, you look at weekly, you look at daily. All right, so there is no one size fit all strategy. Okay, there is no absolute best time frame. It depends on you as a trader. All right. Okay, so of course, you said, how much does politics influence the market? All right, so because politics is connected to economics. Okay, politics is connected to economics. I believe you can. I believe you can see my screen. Yeah, politics is connected to economics. Okay, and because it is connected to economics, because it is politicians, all right, that makes policy. Okay, and policy influences the economy. Okay, now, and the economy influences the market. So politics has a big role to play in the market. All right, in politics, a policy can be made that can increase inflation or keep inflation low. In politics, there are policies that can be made that can increase the growth of the gross domestic product, okay, gross national product, and impact the market as well. There are policies directly connected with economics, so you cannot take away politics from economics, and if you can't do that, then you cannot prevent it from affecting and impacting the market. If you look at the US, for example, you will always discover that the market reacts differently. When Democrats are coming to power, the market reacts differently when Republicans are coming to power. Okay, Republicans have different view of approaching economic issues and policies, while Democrats have another view of the economy. So this is more like the socialist and capitalist. Okay, socialism, capitalism, these are elements of politics and economics, so they are mutually dependent. All right, yeah, how to become a swing trader. So of course, as we have taken this trade here now, all right, it might take weeks for this market to come down here. Okay, so but for swing traders, you take your trade and you go sleep. You can just come to check it once in or twice in, or so let's say 5 times in a week, or let's say 5 times in a week. All right, 4 times in a week. Okay, and you can check it always, but then as a swing trader, you don't have to always take trades, because you are covering, you are going for a larger, you are factoring a larger factor in the market. All right. Yes. So thank you very much, everyone, for joining us. I look forward to seeing you next week at our live trading session, same time, same place. All right. Don't forget to take a picture and share on Instagram. Tag Octa FX, and also use the hashtag learning from Octa FX. All right. Learning with Octa FX, hashtag Octa FX. Thank you very much, and